Maximize your returns and minimize your risks with AI-driven investing. Learn how to become a savvy investor with this video. Are you an investor who wants to maximize returns while minimizing risk? AI technology has revolutionized the business world, and it can do the same for your investments. In this video, we're going to be explaining how it can take full advantage of AI-driven investing, from understanding data relevance and quality to considering the reputation of the provider, and finally, being aware of the ethical and environmental implications of these strategies. Get ready to become a savvy investor who knows the ins and outs of AI-driven investing. Subscribe to Oracle AI now and keep watching to learn the ins and outs of AI-driven investing and become a savvy investor. Don't miss out on this opportunity to maximize returns while minimizing risk. AI technology is becoming more and more important in the business world. Companies are using AI to do boring tasks and make better decisions, which is helping them save time and money. For example, when it comes to investing, businesses can use advanced algorithms and tools like AI to get data that make them smart decisions, which can help them save time and money. For example, when it comes to investing, businesses can use advanced algorithms and tech tools like AI to get data that helps them make smarter decisions. This helps them look at a lot of data quickly and figure out what will happen in the markets, which can lead to better investments with less risk. It's important to understand the risks associated with investing in AI and to make sure you're selecting the right strategy. Companies need to make sure their investments have sensible strategies and take into account performance versus risk so they can be making smart decisions. It's important to do careful research when choosing any AI-based investment system, as different settings can lead to different outcomes depending on the goals of the company or an individual investor. With all these details taken care of, investors can maximize returns while reducing risk, all without having to do everything by hand. But how do we evaluate whether our AI-driven strategy was successful? That's something worth thinking about before jumping into any new venture using this technology. What do you think investment providers should be considering when differentiating between different types of investment and using artificial intelligence, or AI? Leave a comment below with your thoughts. When it comes to using AI for investing, having the right strategy is essential. You should consider things like data relevance and quality, the reputation of the provider, how much human oversight is involved, and regulatory compliance to make sure your strategy is the best fit for your goals. It's also important to evaluate the risk management practices of the system and its past performance to reduce potential risk. Diversifying investments can help minimize volatility in returns, and regularly evaluating performance can help you track your progress better. But with all that taken care of, how do you decide where to start, and how easy or difficult is it to get started with investing in AI? Getting started with AI-driven investing is an important step. It's important to know your risk tolerance and set realistic expectations for returns. This way, you can find an investment provider that meets all your goals, performance aims, and regulatory statutes. Do your research into past performances, strategy models, and points of transparency. Diversifying your investments can help minimize volatility and maximize potential returns. But with the technology landscape changing so quickly, what new considerations do investment providers need to think about when using artificial intelligence? What are some current trends or best practices we should look out for when it comes to AI-driven investing? When it comes to investing, it's important to understand the different strategies that use artificial intelligence, or AI. These strategies include predictive modeling, looking past data and algorithms to predict future outcomes, fundamental analysis, which looks at current market trends and news, evolutionary computing and genetic algorithms, which use evolution to improve performance, and deep learning techniques, which use artificial neural networks trained on large datasets. Depending on your goals and your risk tolerance, you may want to use a combination of these methods. It's also a good idea to work with an experienced advisor who understands both your needs and the AI solutions available in today's market. When it comes to differentiating between different types of investments, what should investment providers consider? What do you think investment providers should be considering when differentiating between different types of investment that use artificial intelligence, or AI? Leave a comment with your thoughts. When it comes to investing in AI, there are some important things to keep in mind. Gathering data from reliable sources and using advanced algorithms can help you make smarter decisions with your money. It's also important to keep track of how your investments are doing over time, especially in markets where prices can change quickly due to news or unexpected events. Lastly, understanding the different strategies are available when it comes to AI investing, like algorithmic trading or robo-advisory services, can help you get better returns with less risk than relying on human judgment alone. So as we learn more about using AI in finance, what has been the most useful aspects of it when it comes to meeting regulatory requirements? When it comes to AI-driven investments, there are more opportunities than ever before. To get the most out of your investments and achieve maximum returns with minimal risk, diversification is key. This means investing in both traditional assets and AI approaches. Regularly monitoring performance against set goals will give you insights into how well or poor your strategies are doing. Focusing too much on one approach can mean missing out on long-term gains from diversifying your portfolio. Combining human and machine-based decisions can yield greater overall benefits. It's important to be aware of data quality issues when investing via an artificial intelligence algorithm, as complete accuracy is still elusive. So what's next for artificial intelligence or AI in investing? Can neural networks become so advanced that all relevant considerations, including regulatory ones, no longer need any human input after implementation? With the development of AI-driven investing, we may see changes in the way investments are done. AI, combined with technologies like blockchain and the Internet of Things, can help investors make smarter decisions about their portfolios by estimating risk and staying up to date with regulations. This can also create more opportunities for people who want to invest in sustainable and socially responsible ways. But as AI advances, what environmental and ethical considerations should companies think about when creating strategies around these new technologies? AI technology is becoming increasingly important in the business world. Companies use AI to automate mundane tasks and make better decisions, helping them save time and money. But what does this mean for investors? They need to understand the risks associated with investing in AI and selecting the right strategy to make smart decisions. Diversifying investments can help reduce volatility in returns, and regularly evaluating performance can help track progress better. But with the technology landscape changing quickly, what new considerations do investment providers need to think about when using artificial intelligence? It's important to consider data relevance and quality, like the reputation of the provider, how much human oversight is involved, and regulatory compliance. AI, combined with other technologies like blockchain and the Internet of Things, can help investors make smarter decisions about their portfolios and create more opportunities for those who want to be invested in sustainable and socially responsible ways. However, it is important to be aware about environmental and ethical considerations when we're making strategies based around these new technologies. To summarize, OpenAI is an artificial intelligence research organization with a mission to promote and develop friendly AI in a responsible and ethical manner. The potential impact of AI on various industries and aspects of life is significant, with the potential to revolutionize healthcare, business, robotics, and big data. OpenAI offers educational resources and is dedicated to promoting transparency and accountability in AI development. The organization is committed to ensuring that AI is developed and used in a responsible and ethical manner for the benefit of humanity as a whole. In our next video, we're going to be exploring how OpenAI is revolutionizing the world with AI-driven investing. Don't miss out on this opportunity to learn how this technology can help you make smarter decisions and maximize returns. How will you use OpenAI to your advantage?